Okay. The difference between a balance sheet and a cash flow statement is on the balance sheet, it talks about what you own, subtracted from what you owe, which is the total value and the total balance to calculate your net worth. On a cash flow statement is actual cash, right? That you are bringing in and cash that you're pushing out, right? So on the balance sheet is like what's in your checking account, what's in your savings account. The cash flow statement is what's coming in and out of that checking and savings account. So cash flow is simply your revenue minus your expenses is going to equal your net income. So an example of revenue is not necessarily the balance of your checking account, but what income is coming in to that account. So, that could be your salary. If you're earning a salary from a job, wages that you're earning from a job, you're getting paid per hour, any type of business income that you're earning from any sales that you're making, right? That's an example of revenue. This income that's coming in to your account. Expenses, for example, are any payments that you are making, right? On the balance sheet, you talk about the total balance of those payments that you're making, the balance of the loan or whatever. So what are the payments you're making towards that credit card or the car or the house or apartment that you are renting or paying the mortgage of, utilities, that'll go in as an expense. Any of your fund money, taxes, anything that you're paying out of your account every single month is what goes on a cash flow statement. And then when you get all of your revenue that's coming in for the month and subtract all of your expenses from that revenue, that income, you're going to get what's called your net income. Your net income lets you know if you're operating positively or negatively. Now, when you're looking at your budget, the hope is that you're operating positively, that when all your expenses are accounted for, you have money left over, which we like to call discretionary income. Now, the discretionary income is great to use for anything like an emergencies, anything to put away for a rainy day, anything you can want to just maybe go have some more fun with, or maybe there are some opportunities that may come up for you. Or does this really just build a cushion in your account for any future type of things that may come up? Because like I said, life be lifing sometimes, right? And so this is how a cash flow statement works. What income is coming into your account and what expenses do you have to pay to come out of your account. A lot different than a balance sheet, whereas it's the total value of the assets that you have and the total balance of the payments that you have to make, right? And so hopefully that gives you understanding of the difference between a balance sheet and a cash flow statement. I did include a template in the Google folder about how to do your budget and how to do a cash flow statement. There's not a template as far as a balance sheet. A balance sheet is real simple. You just do a balance, you do a quick little spreadsheet, do all your assets on one side and all your expenses on the other side, and you can calculate your net worth. You can do that in a spreadsheet. You can Google a bunch of templates about how a balance sheet works. But if you do have any questions, feel free to reach out to me.